How's it going, guys? Welcome back to another video. Today is July 23rd, okay? And today we're doing a Forex trading again on all the accounts. So like I said, I'm going to be documenting every single day, literally like 5 times a week, because I want you to learn how to trade with Forex and how and what we're going to do and so on and so forth. So this is probably going to take a while, okay? And if you have any questions, please let me know. But I'm going to try to go as fast as I can here and teach you exactly what I'm doing, how I trade, how I go about it, what are the risks that we have when you trade Forex and stuff like that. And honestly, the reason why I still do Forex is because I still believe that is a good market if you do know how to trade it the right way, okay? You have to have a really solid risk management of your life and your entire ecosystem, not just in Forex overall. But I still believe it's really good for us to make money on the long run, okay? So that can be for us, when done right, an extra source of income for us. All right, so as you can see, we're trading 10 accounts, and I'm going to start from account 1 today. So look at this. We have 3 open trades here, and one in near USD. Second one's SEK, and then third one is a DNZD. So 2 are positives and 1's negative, but I still don't have enough profit for me to close these trades, so I'm just going to wait. Now account number 2, I am probably going to wait as well. I'm going to have to wait and see what's going to happen. So AUD and DD, let me see something here. Actually, not Euronoc. And okay. Oh yeah, before we continue, let's see the margin level in account number 1. So we always need to take into consideration the margin level, right? So make sure you always see, you gotta always check the margin level, and the margin level is at above 5%, 5,000%. So we're pretty good, we're pretty safe, no problem. And for this one, we're gonna wait as well. I don't know how far I'm gonna wait. Let me just think here. So let's check that really fast. Euro and okay. Let's see. Solid miners. Let me see where I place this order. So where I place this trade. So the first trade I placed was at 11.7537. So 11.7537. It's pretty far. I'm more on here. 74%. Yeah. So you know what I'm gonna do? I'm just gonna place another trade here to increase my average price. I was gonna wait a little longer though, but hold up. Yeah, I'm just gonna open this trade so I don't forget anymore. So what I'm gonna do here, I'm gonna place another selling position on Euro and okay. Okay. So another one. Let me sell 0.13. We're gonna sell it again. And why is that? That is because I'm trying to get a better average price for my trade. Okay. So as of now, for example, let me just remove this grid here. For example, I placed a trade here and I placed another one right here. So if the chart goes more or less to this position right here, to like 50% of the break-even points, then I am gonna be leaving at the break-even point rather than trying to profit off of this trade. And the probability of the market going down here, it's easier and faster than going here, because to go all the way back to the break-even point, it needs to get back to here. So probabilistically, I'm not sure if I can say that, but I don't know if you're understood, but like mathematically speaking, it's easier for the chart to go down here than it is to go down here, and that's why we try to get our average price better. But of course, we cannot do this forever. Like if the chart goes against me, there's obviously a limit to to how far I am, trying to place more trades and getting better average prices. Because if I do that forever, I am probably not gonna have margin to sustain it forever, and that's why I do hedging when something bad happens. And that's why you need to have a really solid risk management for that as well. But as of now, that's pretty much what I'm doing. So yeah, I'm not sure if you really understood it though, but I'm trying to be as thorough as possible so you can understand. But as of now, as you can see, euro knock and okay again. We're earning commission on these trades. We're earning swapping on these trades, and that's pretty much it right now. I'm just gonna keep going now. Oh yeah. Also, the margin level is at 4,000%, which is okay. Account number 3 now. Same thing here, 5,000%. Both of these trades are negative, and this one's positive $5. So there's really not much I can do here. And I opened it yesterday, so there's not much I can do. I'm just gonna have to wait here, and here again, I'm gonna have to wait. Margin level is at 5,000%. It's pretty safe. Account number 4 now. Sorry about this. 4,000%. Same thing here. GBP/NZD negative, but not enough for me to place another trade to get my average price better. Also USD NOK and also Euro SEK. Same thing. I'm just gonna have to wait in here. 4,500% for 500%. Account number 5 now. Same thing. All the trades are going negative. Unfortunately, I am very unlucky as of now in the beginning of this month, because I haven't really had the opportunity to close positive trades. I mean, just a few, but most of the trades are going negative. They're going against me, but there's no problem. So margin level is at 5,000%. Same thing. These trades are all going against me. There's really not much I can do here other than wait. So like I said, guys, that's real Forex. Okay, when it comes to not using stop loss, we need to wait. I think the biggest patience for us as traders, and if you want to be a trader, is that you need to have patience. You need to have patience, okay? And especially if you're not using stop loss, that's kind of how it works. But as you can see, man, it's totally okay. We have a unrealized net or unrealized profit of $200, which in percentage is like what, 2% of the account. So 2% of drawdown for us to be trading. And ideally we want to be below like 10, 15%, 20%, but we can do that. We can use the whole money for us to generate profit off the account, but there are levels to that, and it comes to managing a risk, knowing what you're doing. There are many things that you need to take into consideration before using 100% of your money to do that. But as of now, 2% is like really safe, so we're good to go. And even if we increase to 5, 6, 10, 15, we're okay. And yeah, that's pretty much it. So gotta wait here. Let me see if there's any trade that I close positive here. Oh yeah, so these trades, this account I opened 56, 56, 9. Yeah, I'm probably like 1% positive here, so which is really good. 5,000%. Now let's go to account number 6. Account number 6, 6,000%. That's crazy. Way above what we need. So that's pretty safe. We're paying commission on the first trade, Euro GBP. Not commission, but we're paying swapping positions. These ones are negative. There's really not much we can do here. We opened all of those trades yesterday, so I gotta wait. Account number 7. Let's see what's gonna happen with account number 7. Account number 7 is the same thing. So I opened this trade like what, 5 days ago. I gotta wait for this trade. Also gotta wait for that trade. I'm paying a high swap here, as you can see. Let me see. So 3.24 divided by 5, which is the amount of days that we are trading. As you can see, we're paying around, what was that? We're paying around 64 cents per day on swapping. for us to have this trade open here. So as you can see, that's how you calculate how much swapping you're paying. Like this one, for example, 272 divided by 5, which is the amount of data we're trading. 54 cents. So $54 for us to have a trade open every day, for us to not lose like the account. So for example, if you have a trade open for like, I don't know, 180 days, which is like half a year, you're literally going to pay $100 off of swapping. I don't know if you're understanding what I'm trying to get. But for example, if you're paying like $5 per day versus 1 year, look at how much money you're going to have, that's going to have transformed into. So most people tell you that, oh, but swapping is not, it's not, you don't have to worry about swapping because swapping is safe, whatever. But that really depends though. That really depends on your margin. That really depends on your risk management. That really depends if you have the ability to deposit money or not. That really depends on how far you're willing to stretch it, and how far is it worth stretching, okay, for the risk. So for example, if you only have a $1,800 margin and you're paying $5 a day, like in 1 year potentially, and you're stuck in hedging, for example, you could literally blow up your money. You could blow up your account and lose your account just because you're stuck in hedging, because you cannot get out of it and you don't have more margin to place other trades. So that's why we have to be very careful when it comes to swapping and commissions, okay? And that's why you need to be trading diversify. You need to diversify the trades. That's why I do three different trades. I never open just one trade. I try to open 3, sometimes 4 trades at the same time to diversify. I try to be on a proportional lot size. I try to calculate the swap that I'm paying, the margin that I have available. Like, look at this. I have 10,000% of margin. That's really safe. Even if the charge here goes against me like $1,000, I'm still very safe. And even that could take a long time. Look at how far the chart would have to go for me to lose $1,000. I could have to go to the chart. Have to go all. Okay, hold up. Yeah, it would have to go all the way to down here, all the way down here, and even further, I think, which could take a really long time if it ever happens. Okay, and I still have the other trades to help me, and I still have the other accounts as well. So it's like you're in a war, and these accounts are soldiers for you. I don't know if you really understood the analogy here, but yeah, that's kind of how it works. But yeah, let's continue. So account number 8 now. I might place a trade here. Though. I might place a trade in here. GBP and ZD. So let me see something. Yeah, I'm gonna sell a position in GBP and ZD. 0.13. Okay, so GBP and ZD, as you can see, 2 trades. Yeah, so I get a better average price here. So if the chart goes back to this level here, to this horizontal line level, then what I'm going to do is I'm going to close this trade, because what I do is I basically just try to trade the strategy that I do. I basically just try to trade on the trades that goes into my favor, like trades that goes against me. I don't trade off of them. I don't profit off of them. So I try to maintain a 50% of winning rate, because you can control your winning rate, because it really depends. Like for example, some people, they have 99% of winning rate. But why is it possible? Is it because they're angels, or they're magical human beings or whatever? No. Like the only way for you to get 99% of winning rate is that when the chart goes against you, you just don't close before you profit off of it. So for example, you open a trade in GBP and TD, and then you sell a position, and then the trade goes against you. It goes upwards, but then it goes backwards again to the break-even point. So now you have an option. Now you can either close the trade, or you can wait for the market to go down again, or go up. You don't know when that's gonna happen. But as long as you don't close the trade, you're not gonna, like, you can almost like control your winning rate. For example, if you never close a trade before it goes back to the break-even point, or it gives you profit, sorry, you can literally have 99% of winning rate, but that doesn't guarantee you profit at the end of the month. You know, winning rate has nothing to do with you making money at the end of the month or not. And the reason why I try to not profit off the trades that are against me, because I'm trying to find an equilibrium of the account. So because I don't know, maybe you could spend like 6 months or 3 months in a position, stuck in a position, and it goes back to the break-even point, and because you didn't want to close the trade, it goes back again against you, and now you're paying swapping, you're paying commissions, and you lost the opportunity to open another successful trade. And essentially, there's also the cost of opportunity. Like I said, if you open if you place a trade and you're stuck there for a little while, for a couple of months, you're potentially you have the cost of opportunity lost to, I don't know, making more money on other chart or another currency pair, or maybe even in another market. Maybe if you're trading on the stock market as well, you could be making money there, and you don't have the ability to do that because you're stuck here. So you got to take all these things into consideration, okay? But that's kind of how it works. That's account number 8. And oh my god, man, I know I've been talking a lot, but I really just want to throw as much knowledge as I can so you understand. So it's to help you become a better trader, okay? Because it's all on this. If you don't think about all these minor details, and I know they might seem little, but over time they will be the reason that's gonna make you or break you as a trader. So you need to take that into consideration always, okay? Okay, now let's go to account number 9. Account number 9, I opened this trade like yesterday, so I'm still at break-even point. Just paid it so as you can see, look at this, 144 of swapping. I'm paying that. So for example, in 1 year, that would be like times 365. That would be $500 just off of swapping. And as you can see, look at this. I'm out of lot sizing here. 0.13. So as you can see, 144 times 365. That is $525. So in 1 year, say I open a trade and it goes against me, and I get stuck there for like a year. Or whether I'm in a hedging position, or I don't know, maybe I placed this trade here on EURSAC and then I sold it, and then chart went up for like a whole year, and I had to buy again, and I had to buy another 0.13 because that's what I would do to do hedging. To do hedging, what you're gonna do is, like, if the chart goes against you, you place another trade on the other position to try and protect your account. But then you're stuck here, and then it could potentially take you months for you to make money and to get out of this hedging position. It really depends on the market. It depends on your other trades. You maybe need to eat up the loss with the other trade's profit, and then it's gonna potentially decrease your profit as well, because instead of getting the profit for you would be paying the profit to leave the hedging position. I don't know if you really understood. It's a little confusing, but you're probably gonna get it on the long run. Just keep following, watching the videos. You're gonna understand it. I know I've been talking a lot, but you're gonna get it. So for example, you could pay $500 in 1 year off of this swapping, and that's really bad. I mean, imagine if you're, how long would you stretch it out before you I don't know, before you activate your hedging? Like, for example, it could be like $1,500, right? $1,500, because it's like 15% of the account out of 10,000 on one trade, for example. Boom. Let's say that happens. If that happens, oh, and also not only that, but you're also paying swaps in other trades as well, because if the chart goes against us, we're gonna even try to get a better average price. So we could potentially be wasting and losing even more money. So that's why you need to be in a proportional lot size. You need to be operating with 80 to 001 or 100 to 001. In some cases, if that's all the money that you have, you need to be trading on a 180 to 001. For some of y'all need to be trading on a proportional lot size of 200. Oh my god, look at how shitty this is. 200 to 001. Because that's the only thing that's gonna make you sustainable on the long run, because that's all the money that you have. Say that you only have $10,000 in your account and you just cannot afford to lose this money. Then you cannot be trading. You cannot give yourself the luxury of operating and trading with this proportional lot size of 60 to 001. Because you could potentially lose your money, and people sell you this idea because they want to sell you the idea that you're gonna get rich fast. But if you try to get rich fast, boom, most of the times you're gonna blow up your fucking account. That's what happens, man. Like, there's no get rich quick scheme. It doesn't work. Every time you try to fall into this path of getting rich fast, or anything is a magic formula, most of the times it's just a scam, and there's probably a catch in there that you're not understanding, and you're gonna get it on the long time, and you're gonna lose your money. So it's very, very, very personal. But let's say you only have $10,000. So if you only have $10,000, then you'll probably be on 180, like I said, 2001. Because that being said, for example, let's say 15% of your money would of your drawdown would be $1,500. But if you're operating on a proportional lot size of 180 to 001, that could take months until that happens, and you're also barely paying any swapping. So that could take years into you actually losing your money, or losing your account. You could potentially take years, and the more you stretch your time factor, the easier it is for you. Okay, so even if you stay stuck in a position for a little while, the longer you stretch it, the better. So for example, I have this chart here, I have this graphic here. So let's say this is time. The further the time, the better for you. So for example, you want to be in a position where you take a lot longer to break an account or to be stuck in hedging. Like you better take this long than to be stuck in here. Because the further the time, okay, the further the time, the better it is for you. Okay, so you want to be, if you are here, like at this place right here, then it's probably gonna be harder for you to save up your account. But if you have time in your favor, and on these waves, because these are the cyclical waves, okay, of the market's cyclical. So sometimes the strategy works, sometimes, and some other times the strategy won't work, but you have time in your favor, you're very likely to save up your account, just in case you're stuck in hedging position for a little while. So like I said, I'm only saying all these things because I really want to teach you exactly of how I think and how I go about it on not trading with a stop loss, and how you can save up your account just in case something happens. For example, something happened with USD JPY. I think it's USD JPY, right? Yeah. JPY is only going up. I'm not sure. Oh, it's going down right now. I mean, started to go down. Look at this. JPY started only going up for a really long time. So as you can see, I know people that have been stuck in this position, that could be stuck in this position here for like a year. Look at how far the market took to go back to the break-even point, and it's not even there yet. You see, so that's what could happen to you, for example, if you're very unlucky. But when that happens, and if you're trading with a proportional lot size, you're barely paying any swap. You have all the other trades trying to, eat up your loss, so you can decrease your position bit by bit. So instead of being like on 0.13, you would be on 0.12, 0.11, 0.10, until eventually you can leave this account. And you could deposit more money, just in worst case scenario, or I don't know, maybe there are other strategies that you could do. But ideally in the perfect world, and I know it's not for everybody, but ideally you don't want to put all of your money into high risk investments, and that is one of the reasons why, because you could be really stuck in this position. Ideally, what you want to do is almost act like I said, this is an iceberg. So that's the tip of the iceberg, and just right here is your entire system. Okay, so Forex would be this for your life, ideally, in the perfect world. Okay, and why is that? Because worst case scenario, something happens, you have, I don't know, treasury bonds here to save your account. You have stocks, you earn dividends. You also have your work, which generates you money, and you have other investments. Like, I don't know, maybe you earn dividends from stocks. Maybe you earn passive money. Maybe you earn money from real estate, and potentially worst case scenario, because you have a high margin of money here, you could save up this small account here. Potentially, so then it allows you to go back to break-even point and generate you more money to be thrown in here, the treasury bonds and stocks, so you can keep repeating the cycle. It's kind of like this. So you push down or up, and then the amount of money that you make there goes back to here, and then it goes back here again just a little bit. And then that's how you increase your account in Forex. That's how you increase your account on stocks. That's how you increase your account on treasury bonds. And that's kind of how the system works in the perfect world, though. All right, some people, they don't do this. Some people, they act like this is the whole iceberg. So the whole iceberg for them is Forex. Oh my god, I'm sorry for this, guys, y'all. And if you act like this is your entire iceberg, what's gonna happen is, what happens when you go down to, I don't know, 80% of drawdown, 90% of drawdown, and you don't have any more money to save your account? What happens if you have, I don't know, $100,000, and that's all of your life savings account? Your life savings earnings, and you are out of the proportional lot size because some guru sold you the idea that you're gonna get rich tomorrow. And then now you're trying to do, I don't know, 15% every month, 20% every month, and then you do it for like 2, 3, 4, 5 months. But on the 6th month, you get stuck in hedging, and you're stuck in hedging for like 70% of your account. And now you're paying a really expensive swap, and now you're paying a really expensive commission. Now you have no margin of error anymore. Now you cannot open more trades because all of your margin is compromised. And maybe you have like 2 years or 1 year to save up your account. And not only that, but on top of this, you're also paying. There's also a regulation in all of the brokerage. One of the brokers that tells you that if you have a trade open for more than 365 days, some of the brokers are gonna automatically close the order for you because it is for your own protection based on what they are selling this to you. So you could be stuck in a position for 1 year. It's not everywhere, okay? But some of these brokers do that. And say, for example, you have 50%. You have like I don't know, 40% of your account is stuck in your USD, and then you're there for over 365 days, which could represent, I don't know, 40% of your account. And if that happens, and then you're not able to save up that account, what happens is, boom, you lost 40% of your account. So you went from 100K to 60K, and you lost 40K. You lost 40% of your account. Not only that, but you also have other trades negative as well. And how are you gonna get this $100,000 back? That could take you years, because now you need to almost double up your money in less than 1 year for you to just go back to where you were before. So that's why you don't want to do Forex. You don't want to put all of your money in here, okay? Unless it's like, I don't know, maybe $200, because it is one thing for you to like put $200 into Forex, right? Oh my god, let me do that again. It is one thing for you to put $200 into Forex, or I don't know, $300, or yeah, just let's say $300, and there's a whole other thing for you to put, I don't know, $50,000. And it's a whole other thing for you to put, I don't know, $200,000. And it's a whole different thing for you to put $1 million. So you have to take into consideration all of these things. You have to take into consideration the amount of money that you make. I mean, how long did it take for you to make this $1 million? How long did it take for you, I don't know, to make 100K? How much money do you make every year? How much money can you save up every month? And in the span of a year, how much money you would have made, after all of your expenses. So worst case scenario, something happens and you lose your 100K. How long would it take for you to get this money back? Never. 5 years, 2 years, 3 years. Are you specialized in any area? Do you have a fixed salary, or it's not a fixed salary? Are you an entrepreneur? So it's like all about ups and downs. Was this money inherited or something? Like, there's so many things you need to take into consideration, okay? And a lot of people, they don't tell you this. They just tell you to come here, just put all of your money in this bullshit, and then get rich. And that's not how it works, because if you do that, most likely you're gonna blow up your money and you're gonna fuck up your life. And I say that because I fucked up, because I'm living proof. Nobody told me this. I had to literally lose pretty much everything I had for so long until I really understood it, what to do, and that's why I am so annoying when I talk about these things, because I could stay here for like 6 hours talking about risk with you guys, and most of y'all are not even gonna say that I'm annoying for saying that, but the people that actually listens to this thing will be the people that will survive on the long run on the market. And these are the people that are more likely to become successful in this market than any other traders. Okay, because I've been through that. I've been at the time at once where I was desperate for money. I was fucked up. I was jobless, and I only have a savings that I earned throughout my years, and I needed some money as fast as possible. And you know, I didn't know how to trade, and I ended up risking all of my account, and ended up blowing my account, ended up going bankrupt many times. I failed. You have no idea what I've been through, guys. So when I talk about these things, it's because it is real. Like, I don't want you going through the same things, because it's just very sad. Okay, you don't want to go through that. Okay. So with all of that thing being said, let's go back to account number 10. So 4,000%. Account number 10 now. Yeah, the same thing, negative. If this chart here goes more against me, I don't know, maybe to 250 or 270 or 300, then I'm probably gonna sell again. Same thing with the GBP AUD, same thing with Euro CAD. Okay, so that was the video, guys. That was the video, and as you can see, this is our Myfxbook here. As you can see the growth of the account, the equity, the lot size, when I opened the trade, when I closed it, how much drawdown do I have, the worst trade, the best trade, shorts one, the longs one, the amount of trades, the profit factor, the standard deviation, the risk that I have for these accounts, account number 2. So as you can see, you can literally see everything here. Okay, you can see the margin, the drawdown. I mean, there's not enough data here because the account just started like not even a week ago, so that's why you probably won't be seeing much, but you're gonna be seeing that on the long run. Okay, let me just see another account here. For example, account number 4. Yeah, account number 4 has the best performance overall. 0.26, 0.5, 0.8. As you can see, that's the drawdown of the account. Percentage monthly 2.59%. The balance, the profit, the drawdown, the margin, and the growth, and everything. So I'm gonna leave my Myfxbook just down in the description so you can see and check it for yourself what's happening to the accounts. But that's kind of what it is. Okay. And I really hope you got something out of it. Okay, and I'm sorry for repeating myself many times, but I really needed to teach it. Okay, I don't think that like if you don't learn these things, if you don't learn it from me, then you're gonna learn it from the market anyway. Because I'm not saying that because I am better than anyone, but it's only because you have to understand the risk that you're facing. You have to understand the risk that you are running. Like, what is the risk that you're running? What is the uncertainty that you're running when you're trading in Forex? And if you don't understand what I'm telling you, then the market's gonna tell you. Because if you just think that you can come here and do whatever the fuck you want, the market's gonna make you lose all of your money, and it's not gonna be pitiful on you. And the market doesn't care if you had your inherited money from your parents. I don't know if that happened to you. The market doesn't care if you work 10 years to have I don't know, your life savings expenses, and you lost it. The market doesn't care if you lost $1 million. The market doesn't care if you worked, I don't know, 20 hours a day for 5 years for you to save up some money and put here and lose in 1 month. So the market doesn't care about it. So you have to respect yourself. You know, that's kind of what I'm trying to teach you in these series. You really need to respect your life and your help and your time. Okay, you need to respect the fact that you worked really hard to save up money to just come here and put it and blow up your account in like a month. Okay, so take that into consideration, and this is why I'm very annoyed when it comes to that, because this is high risk investment, and if you're not careful, you're probably gonna lose up money. And another thing that I'm gonna say, just so I can wrap up this video, is don't be fully reliant on Forex. Okay, I teach Forex, but I don't do Forex like full time. I have many other businesses. I work with YouTube. I am an entrepreneur. I have other business outside of the YouTube as well. So I try to have other types of investments that I can rely more on. For example, treasury bonds, which is safer. I have stocks that I can earn dividends from. I have indexes. I earn money from other work that I do, from other jobs that I do as well, in which I have a little bit more stable income. And that's kind of what you want to do here. Okay, you don't want to be fully relying on this. Some people, they do choose to live off of this if they have a really high net worth already. But even if you have a really high net worth already, you need to have cash flow, you need to have working capital, you need to have many things, and that's still variable income. You cannot control what's going to happen by the end of the month. But the problem with that is that you still have a fixed expenses every month. You have fixed expenses every month. You have your mortgage, you have your car payment, you have your electricity bills, your water bill, your internet bill, you got to pay for food, you have transport. There are many things that are fixed every month. So that's why it's really hard depending solely on high risk investments. Okay. But that doesn't exclude the fact that you can still use it to make an extra income. But like I said, in the right way, it's going to be more beneficial than it's going to be harmful. And if you do understand that spot, that difference between, doing this to earn more and not to be fully relying on it, just to be another source of income for you. And if you do get on the right spot and do this the right way, then the chances are you are more likely to succeed than you are not to succeed. So with all of that being said, I know it was really long, but if you made it to the end of this video, that probably means you're gonna be successful at trading. And honestly, I don't care if no one watches it, as long as I teach the right thing, and as long as the people that listens to me understand it and they become good because of what I'm saying, and they're not gonna go ahead and shoot themselves on their own feet, on their own foot. For example, blowing up their account or doing something stupid, and they can be educated traders. They can take better decisions, and they can survive long term on the market. Then I think I made my part. Okay, because I'm not gonna be on this YouTube to lie to people. I don't want to be on this YouTube if it's not to be helpful for society in any way. Okay, and no, I'm not trying to be like an angel or something, but I also don't want to be another guru that sells you a fucking idea that's gonna sell you an illusion to, I don't know, make you to say that I'm gonna make you rich in like a month or two or something like this. I don't want to be that person. I want to sell you the reality and the truth. So you're safe and you can be intelligent, and you don't have to suffer the same way I suffered when I was starting in trading as well. Okay. So that was the video, guys. Thank you so much for watching. I know it was a lot, but I think it's worth it. Okay. I think it's really worth it. Other than that, I'll see you in the next one. Okay. Like I said, I'm putting the Myfxbook here. I'm also going to send you the link of one of the brokers that I'm using right now that has CTrader, because CTrader is different than MT4. Okay, MT4 is totally different, and I'm loving CTrader. I really love it. It's kind of intuitive. It's easy to understand. It's easy place to trade. So you have also the phone version. So not only do you have the desktop version, but you also have the phone version, which is really good to help you trading on your phone when you need. But yeah, so I'll see you in the next one. Subscribe for more, and I'll catch you later. Bye.